To all my professors, I think that, yes, we've done a lot of discussions on a lot of things. Now, I want to take things step by step so that I don't confuse any of you. However, along the line, if you get confused, pause the whole discussion and ask me so that we clear your confusion and move on. Okay. So you can see on the screen that I have brought back the 11 transactions we saw. And my belief is that at least each and every one of you appreciate the impact these transactions have on the asset, capital, liabilities of a business. I'll go through again one by one, but this time I'll be making the entries in the T account, right? So the first one was investment by the owner. And here we meant that the business is getting something from the owner. I want to put things in perspective so that you can understand from your end. So see yourself as a business and see your parent as the owners or your owners. Okay. So investment by the owner here means that your parents are giving you the business something. And that could be cash, it could be a land, it could be a vehicle, it could be an equipment, right? So when your parents give you that particular resource, you as a business, you have to record it. But before you record it, you have to see the impact or the effect that transaction is having on your asset liability capital. Okay. That was the reason why we went to do increase in this, increase in that. So again, we all appreciated that when the owner invests something into a business, right? Two things happen. There's increase in asset and there is increase in capital. So the example I gave, if you are a business and your parents are the owners, when your parents give you cash, you, the business, will realize that, okay, this cash is coming from my parents. And so that is capital. Remember, resources coming from the owner is referred to as capital. So you acknowledge capital. But then you also see the other side that this capital came in the form of cash. So the two things are capital and the cash, which is an asset. So capital and asset. And both of them increase. Please, professors, do you appreciate what I've just said?
Yes, please.
Good. So if you now realize that anytime the owner makes investment, there is increase in asset and increase in capital, then you apply the principle. What does the principle say? The principle says that when assets increase, what do we do? When assets increase, what do we do, dear professors? And I think I want...
Yes, we debit.
Exactly, we debit. So if the owner makes an investment and asset increases, then it means that we are going to debit the asset. And correspondingly, capital also increase. And the principle says that when capital increase, what do? We credit. So look at how we are going to record the transaction in the T account. So the two accounts will be the asset account and the capital account. So you see the capital account here. And the asset, the specific asset was cash, because the example I have here is that the owner started business with 7,000 cash, or the owner made investment of 7,000 cash. So it's capital and cash. So we have the asset account, which is cash, and then capital account. And as you have all agreed, the asset cash is increasing, so you debit. So look at it. When you open the T account for cash, you record at the left side, which is the debit side. And what do you pick? You pick the date of the transaction. That's the first entry you make, right? So 1st January 2022, as you see in the transaction. okay? Then the narration or the particulars I spoke about. In the cash account, you indicate that, oh, it is capital that came, and you put the amount there. When you go to the capital account, you are supposed to credit that one. So for the capital account, as you see here, the entry will come to the right side. Again, we pick the date, 1st January 2022, 2022. And in the capital account, the details will be what? Cash, which is the corresponding account. And you put the amount there. So you now satisfy the double entry principle, which says that for every transaction, when you do a debit entry, there should be a corresponding what? Credit entry. Do I need to go over, or my professors are okay?
Okay, sir.
Topic go over.
I want to hear from others. I've heard from Portia and Augustine, Oswald, Bridget, Emmanuel, Eugenia.
Sir, please go over.
Okay.
Sir, please go over.
Okay. Okay. So please, I'm going over for the last time. If you tell me to go over again, I won't go over, I'll fly over. Okay, so the first transaction we are focusing on is when the owner makes investment in the business. The first thing I want you to appreciate is that this transaction will lead to increase in asset and increase in capital. Please, if we are all on the same page on that, then applying the principle is simple. If asset increase, we debit. When they decrease, we do what? We credit. Now, let me do this for us. I think this will even make things more clearer, okay? So let me put another transaction here. So let me put a transaction. On 1st January 2025, Araba invested $20,000 worth of building into a business. Okay, so dear professors, we are being told that Araba invested what? $20,000 worth of building into her business. So clearly you see that this is the owner making investment in the business, right? And the analysis are that it will lead to increase in asset. Please, let me ask my professor, what asset is increasing here? I think Oswald should answer this. Oswald, what asset is increased here or is increasing?
And please, increasing assets, so, so please, I think increasing assets building or
Exactly. That your thinking is correct. Building. The specific asset that is being increased is what? Building. Right? And the other one is increase in capital. Okay. And as we saw, always the capital increases and always the asset increase. But then the asset may be building, it may be land, it may be cash. Okay, so you note the specific asset. So if you get this point, then apply the principle. The principle says that if asset is increasing, you debit it. And if its capital is increasing, you credit. So Luca Pacioli is trying to tell you that after making this analysis, go and draw your T account for these two items. So the two items will be building and capital, right? So let's open those two. Let me use my pencil. So I'll open one T account, please. Your T account should always be straight. Mine is very rough. I wish, okay, let me do something. Let me copy. Let me copy from here. Please pardon me. Let me copy some of the accounts so that you can appreciate what I'm talking about. Okay. So as you have it here, the two accounts you are supposed to open will be building account, okay, as well as capital account. Let me erase these details in there. Right. And you see, always at the amount column, you put the currency in the question or the currency given. But after the analysis, the two accounts you are supposed to open will be building and what capital. The building is an asset and it is increasing. And the principle says that when it increases, debit it, which means come to the left side here and make the recordings. What do you record? You record the date. So 1st January 2025, right? And then the details. The details is the corresponding account. So in the building account, the corresponding account is who? Capital. Then you put the amount there, which is 20,000. And you have debited the asset building. The corresponding entry will be the credit in the capital, because if capital is also increasing, we credit it. So you come here 1st January 2025. The details will be who? Building. And then you put the amount 20,000. But like I always say, on the amount column, you have to put the currency, which is the dollar, okay, on both sides of the account. So is it making some kind of sense now, professors?
Yes, please.
So let me give another example, and then I will see if my professors can do justice to it. So another example, this one is on the 15th of February 2024, Ojo started business with an amount of 50,000 cash. Okay, so professors, I want the analysis. Kojo started business with an amount of 50,000 cash. Prof. Eugenia, would you do the analysis for us? Oh,
Should I indicate debit and credit, or I
okay.
should just state?
Okay, so do this. State the effects. What is increasing or what is decreasing? And if you can add the debit and credit, I'll be glad as well. Okay, I think Prof. Iman, I'll come to you.
Okay. Decrease in assets.
Mm-hmm.
And decrease in assets, cash,
Mm-hmm.
which is credit.
Mm-hmm.
And
Okay, that was a good attempt, Eugenia. Thank you very much. Let me hear from Kujo, Prof. Kujo.
So you open a cash and bank account,
Mm-hmm.
then you say you credit the cash and So it credits the bank and deposits the cash, I think.
Okay. Okay. Interesting response. I'm glad with the responses as always. Prof. Bridget, I want to hear you before maybe I give Portia Portia. So hold on for me. Prof. Bridget, can we hear from you? Yeah, Augustine, I'll come to you later. Let me hear from Bridget first.
Oh. That's silence.
Prof. Bridget. Prof. Abubakar. Okay,
Yes, sir.
Share your thoughts on this one. First, if you can tell us what is increasing or what is decreasing as in the effect, then if possible, you can add the debit and credit.
Okay, sir. So I'm coming.
Okay, we are waiting. Oh, okay. I think Prof. Abubakar is gathering his thoughts. So let me hear from Portia.
So the effect would be there will be the capital and the cash account to be opened. The cash account is increasing by this amount, 50,000, and the capital account also increased by that amount since we are starting a business.
Okay, Augustine. Let me hear from Augustine.
And say, please, the effect is that asset cash will increase and the capital to also increase. So that will cause, if you want to record it, that will lead to if you want to record it, you record the asset as a debit and record the credit as record the capital as a credit.
Okay. So now let me comment on Eugenius and Kujo's responses. So I think they all got one side of it, but they missed the other side. So Prof. Kujo and Prof. Eugenia, take note here. So first of all, when you see the transaction, you should be able to tell what is increasing or what is decreasing. You should give that two effect. Okay. So both of you had one correct, but you missed the other. So look at the transaction. Kojo started a business with an amount of 50,000 cash. If Kojo is starting a business, it means Kojo is the owner. So in simple terms, Kojo is investing in a business. And we have analyzed that anytime the owner is investing in the business, it always leads to increase in asset, but you need to tell us the specific asset. What is it? In this case, it is cash. And there's also a corresponding increase in capital. Right? So I think Prof. Kujo got the cash bit and Prof. Eugenia also got, I think, the capital bit. Yeah. Prof. Abubakar, you are back. But I guess.
Yes, please.
Yeah.
Please,
So,
my phone went off.
Oh, sorry. Anyway, welcome back. Okay. So you still want to share your thoughts or we should move on? Okay, I think Prof would want us to move on. Okay, so when you get this, then you can easily draw your two accounts. So the two account will be cash account, which is the asset, and then capital account, right? So let me draw the two accounts down here. Again, sorry, I have to copy it again and paste and do the corrections. So we would have cash account and capital, right? Capital is already there. Sometimes you can add the account or you can just write the name capital like this. Okay, it is acceptable. Nobody will penalize you. As well as the cash, you can add the account or just cash like this. Okay, so now that you have your two accounts, how do you know whether you are supposed to debit or credit? You apply the principle. The principle says when asset increase, you debit. So for the cash, we'll come to the left side, right? And put the entries there. 15th February 2024. The details will be the name of the other account, which is capital. And you put the amount there, 50,000. Right here is Ghana City, so you have to put the Ghana City on top of the account on both sides. On both sides, that's the debit and credit side. Then in the capital account, we know that when capital increases, we credit, right? So 15th February 2024, the narration will be the other account, which is cash. Then we put 50,000 there. I was supposed to bring my currency before that, but I believe professors appreciate. So first of all, you need to get this analysis done. And based on the analysis, you can apply the principle of if assets increase, you debit, and when it decreases, you credit. Let me go to that table again. Okay, you can apply this. That when assets or expenses increase, you debit. When they decrease, you credit. And vice versa for capital, liability, and income. Okay. So I think as we solve more illustrations, you are going to get it. Okay, so don't get worried at all. At least by the end of today's class, you should be comfortable with when the owner is making investment. Let me put another example here. I don't know if this one, my professors will do it in their exercise books and share on their private pages. So 21st January 2025, Amina, a trader, introduced $5,000 worth of land into her business. So professors, all that I want you to do, number one, is to tell me the effect, the two effects, increase in this, whatever that, before you now prepare the T account. Please, how many of us can comfortably do that? Thumbs up or put up your hand using the reaction in there. Okay, so Portia, Josephine, all's well, great. Okay, how many of us can, okay, I'll call you Augustine too. So I have 4 or 5, half of the class. Okay. Okay, Abubakar also added 6. That's great. Zoe, 7, great. So professors, if you can tell me about the effect and go ahead to prepare the 2 account, then that's awesome. We are making a serious progress. I love it. So you know what? I'll spare you for this one. I'll discuss this one with you, but I'll give you maybe 2 or 3 to do in the page. So let's analyze again. Amina, a trader, introduces $5,000 worth of land into a business. So obviously Amina is the owner of the business and she's introducing 5 million worth of land. And as we know, land is an asset. So professors, again, if you don't know your assets and examples, you'll struggle here too. So please go and watch that video too, where we define asset, examples of asset, liabilities, examples of liabilities. Very important. So here, the analysis you can make is that there will be increase in asset, and the specific asset is land, and there will also be increase in capital, right? As simple as that. In terms of the account, we would have a land account and capital account, right? Land account and capital account. So who do we debit, who do we credit? We apply the principle and we realize that when asset is increasing, we debit. So it means we have to debit the land by recording at the debit side, and we'll credit capital. Okay, so you draw your T account, 21st January 2025. In the land account, the details will be capital. The amount will be 5,000. Then you come to the capital account, credit it, 21st January 2025. Land, 5,000. Please, I don't want you to miss the details at all. You see, the details in one account is the other account, the corresponding account. So don't miss it at all. Great. So, yes, Josephine, you have a question?
Yes, please. So, when you are writing the account, are we to write the Ghana cedis or the dollars or anything on top of it or in front of it?
Okay, so it should be, okay, let me label the columns. So the first column here will be your date. The next one is the details or particulars. And then you have the amount there, right? Amount. So the same on the other side, but that one, the date starts here, followed by the details, and then the amount. So this is how the account is, right? But as you become experienced, you are not supposed to put these namings or labels there, right? So you know that your first column is the date, the second is the details, the third is the amount. So normally, we don't indicate it, right? But at the amount column, we put the currency there. So we put the currency on top of it. Okay. I hope that is okay.
Yes, please. Thank you.
So, professors, today, I think we've run through a lot of things, but what I want you to appreciate is one of the 11 transactions, that's the owner making an investment. So when you see the transaction, you do the analysis. Immediately you realize that it's the owner of the business who is introducing or starting or investing. Then you should not miss these two at all. It will always be increase in asset and increase in capital, right? You open the asset account, and as you know from the principle, Abubakar, a question. Go ahead.
Sir. Yes, please. Why is there an increase in capital?
Okay, so the example I gave, so take yourself, Abubakar, take yourself as a business and your parent as your owners, right? So if your parent invest anything in you as a business, you the business, this is how you see it. So first of all, example, your parent give you 100 cedis cash. So Abubakar as a business, you acknowledge that, okay, I'm having cash. So my cash, which is an asset, will increase. But you also acknowledge that this cash is coming from my owners. And we saw that anything coming from owners is called what? Capital. So you are going to see capital and what? Cash. Okay. Your capital will increase because if your parent don't give you anything, the capital is zero. So immediately they give you something, the capital increases, right?
Okay.
So that's why we have increase in capital and increase in asset.
So, sir.
Yeah.
Please, capital does not only deal with money.
Yeah, so the capital cannot always be money. It can be other asset like land, building. So even the example I gave about your parent will not always give you money, cash. They can sometimes give you a land or a car. or a bag.
Okay.
Uh-huh.
Okay. Okay. Thank you.
Thank you too for the question. I appreciate it. Josephine, go ahead.
Sir, please, so does that mean that whatever your owners give you is a capital?
Yes, whatever you receive as a business from your owners is capital.
Thank you.
Yeah, you're welcome. So you always acknowledge that capital, but you also look at what specific thing came as a capital. Is it land? Is it cash? So you always have the two sides, the capital and the other thing that came. Is it cash? Is it land? Is it a building? Okay. Because the principle says that in every transaction, you should see the two things. Okay. Any other questions? No. So what okay, Portia.
Sir, please. Okay, if she introduced $5,000 of worth of land into a business, how will you treat the land?
So the land is the asset she's introducing, right? The 5,000 is the value of the land. Okay. So the principle remains the same. Our asset land is increasing. So increase in asset land and increase in capital. And the principle says that when asset increase, we debit. But this asset is land. That's why we wrote land account, right? And debited it because it is increasing.
Yes, please.
Okay.
Thank you, sir.
Yeah, thank you too. In fact, today I'm glad with the question. So we credit the capital and debit the asset cash. Okay. Somebody in the chat. Okay, so professors, I'll put like 3 examples, but all of them are about the owner investing. Okay, so that you can grasp that one. Then hopefully, when we meet on Wednesday, we'll look at the other transaction, the sale of goods, the purchase of goods, so that you can also appreciate how you debit and credits, blah, blah, blah. Okay, so thank you very much, professors. Today's class was awesome, especially because you were asking questions to clear your confusions. I'm very happy when students do that. So even if still you have some issues, come to my DM. Your private pages there, ask me. I would answer you. So it's a wrap from Mr. Amwa. I'll see you when I see you. Bye-bye.
Bye.
Bye, sir.
Yeah, bye, 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 bye.
Bye.